He had inflation at 9%, and Biden's poll ratings were in the toilet. But again, it was the abortion issue that wasn't an issue this time. It was the economy, stupid. So I guess what Powell is saying is nothing more than a lot of, yep, because it ain't what's going on. Gold's taking a hit. Again, as I say, nobody could predict the future. There are too many wild cards. Trump coming into office, the whole game changed. He's talking about peace. But anyway, when Trump is not, Trump isn't positive a bet for gold. Some of the data here, gold's down 5%. And that's what happened back in 2016 when he got elected, and it bottomed out. It went down 12% before it bottomed. And back then, silver fell 13%. So Trump's not a positive one for gold. We believe, and again, we don't know, but we believe that he's going to do what he always does. By their deeds you shall know them. And he's always pushed the Fed to lower interest rates. So if the Fed lowers interest rates, the dollar, which had gotten stronger, goes down. The deeper the dollar falls, the higher gold prices go. End of story. So again, right now it's a guessing game. What's going to go on? Again, what Powell said about the strong economy, credit card debt hits $1.7 trillion. Yep, that's up over 8% from a year ago. Canada faces 15.4% jump in personal insolvencies. We're mentioning this as a global slowdown. Two articles came out, one in Vogue about the luxury goods market has lost some 50 million consumers this year. And another article came out saying basically luxury good market's facing its first slowdown since the panic of '08. We've been writing about this in your Trends Journal now for over a year. And now it's just making the news. And again, totally out of the news. Not a word about it is the office building bust. Not a word. And that's going to bring down the banks. So people ask, where's the markets going? There are wild cards out there. And will they be played this year? Time will tell. Takeover by Verizon. Get shareholder approval. Yeah. Wonder Near's deal to acquire Grubhub. BioNTech strikes $950 million China deal. Again, we mention this because all it is the big's getting bigger. And China, by the way, as we said, the business of China's business until, of course, they launched the COVID war and destroyed their economy. But now you got articles coming out in the media about how China is doing so great in South America and how they just built this huge port in Peru. And Peru's made in China megaport to transform trade. That's the Financial Times. Latin American trade is dominated by China. As we say, the business of America's war and the business of China's business. Hey, more money. We're sending more money to Ukraine, more money to Israel. Keep killing those people. Bloody the killing fields. Yep.
Gold and silver have long stood as the ultimate hedges against economic instability, geopolitical turmoil, and systemic risks. For centuries, these metals have preserved wealth through the rise and fall of empires, economic depressions, and currency crises. Gerald Celente's astute observations on the current global financial climate only reinforce the value of these precious metals in a world teetering on the edge of uncertainty. The global economic landscape today is fraught with challenges that demand a re-evaluation of traditional investment strategies. Credit card debt in the United States has reached an alarming $1.7 trillion, an increase of over 8% from the previous year. This is not merely a statistical anomaly, but a symptom of a larger issue, a growing reliance on debt to sustain consumption in the face of stagnant wage growth and rising living costs. Meanwhile, in Canada, personal insolvencies have surged by 15.4%, painting a grim picture of household financial stability across North America. This debt-driven economic model is unsustainable. It fosters a dangerous cycle where rising debt levels undermine consumer spending power, leading to slower economic growth and ultimately financial crises. As Celente points out, the global slowdown is not a distant possibility, but a present reality. The luxury goods market, a bellwether for high-income consumer confidence, has lost 50 million consumers this year alone. For the first time since the financial panic of 2008, the luxury sector is facing a significant contraction, underscoring the widespread economic malaise. Beyond these immediate concerns lies an even more ominous threat: the office building bust. This issue has received scant attention in mainstream discourse, yet its implications for the financial system are profound. Commercial real estate, particularly office spaces, is grappling with plummeting demand as remote work becomes a permanent fixture for many businesses. This downturn threatens to destabilize banks heavily invested in commercial real estate, potentially triggering a financial domino effect that could rival the 2008 crisis. Trump's recent electoral victory adds another layer of complexity to this already volatile environment. His promise to rejuvenate the economy resonates with many who feel left behind by the current system. However, as Celente highlights, the economic challenges facing the U.S. are structural and cannot be resolved through rhetoric alone. Trump's history of advocating for lower interest rates and a weaker dollar may provide temporary relief but risks exacerbating long-term inflationary pressures. The intersection of these economic and political factors creates a fertile ground for gold and silver to shine. Historically, these metals have thrived during periods of uncertainty. Their value is not tied to any government or central bank, making them reliable stores of wealth when fiat currencies falter. As the Federal Reserve contemplates further rate cuts, the dollar's strength could wane, paving the way for a resurgence in gold and silver prices. Central banks worldwide have been quietly but aggressively accumulating gold, signaling a lack of confidence in the US dollar's long-term stability. This trend reflects a broader shift away from dollar hegemony, with countries like China and Russia leading the charge. The creation of alternative payment systems and reserve currencies, including discussions around a gold-backed BRICS currency, further underscores the diminishing appeal of the dollar. This de-dollarization movement is not merely a geopolitical maneuver, but a rational response to the risks associated with holding dollar-denominated assets. The weaponization of the dollar through sanctions and trade restrictions has alienated many countries, prompting them to seek more stable and politically neutral reserves. Gold, with its intrinsic value and universal acceptance, is the natural choice. Gerald Celente's emphasis on the unpredictability of current markets serves as a timely reminder for investors to diversify their portfolios. The wildcards he mentions, ranging from geopolitical events to economic shocks, are not mere hypotheticals, but real possibilities that could reshape the financial landscape overnight. In such an environment, holding tangible assets like gold and silver is not just prudent, but essential. The journey ahead is fraught with challenges, but it also presents opportunities for those who can navigate it wisely. Gold and silver, with their proven track record and intrinsic value, offer a pathway to financial security in an uncertain world. As Celente aptly points out, the key to thriving in these times is to anticipate the trends and position oneself accordingly.
The markets, well, they were down a bit today. Let's see. The Dow was down 207 points. The S&P 0.6, not big. The NASDAQ down 0.64. And the reason being, they say, is that the Fed head Jerome Powell said today, quote, "The strength we are currently seeing in the economy gives us the ability to approach our decisions carefully," meaning how they're going to lower interest rates. And before he said that, the street was betting 82.5% earlier in the day that they'd lower them another 25 basis points next month. And now that number's dropped down to 62%. The CPI is up 3.3% for the year. Okay, so let's go back to what Powell said. The strength we are currently seeing in the economy. Strength? Didn't Trump just win the election? And why did he win the election? Well, because as the cover of the Trends Journal this week shows, it's the plantation workers of Slavelandia that are broke. And they say Biden busted them. So there you go. So who's bullshitting? They said the economy's strong, but not according to the people. And again, as I said before, when the Republicans lost the midterms in 2022, you had inflation at 9%, and Biden's poll ratings were in the toilet. But again, it was the abortion issue that wasn't an issue this time. It was the economy's stupid. So I guess what Powell is saying is nothing more than a lot of, yep, because it ain't what's going on. Gold's taking a hit. Again, as I say, nobody could predict the future. There are too many wild cards. Trump coming into office, the whole game changed. He's talking about peace. So the fear of global war, that's gone down a bit. But again, we'll get to that. The people that he's picking are pretty war hawkish. Maybe there'll be some peace in Ukraine, but not in the Middle East. But anyway, when Trump is not, Trump isn't positive a bet for gold. The some of the data here. Gold's down 5%. And that's what happened back in 2016 when he got elected, and it bottomed out. It went down 12% before it bottomed. And back then, silver fell 13%. So Trump's not a positive one for gold. And what did Bitcoin do today? Yeah, Bitcoin went down a bit, but it's still way up there. So what? As we went on the air, it's at 87,750. And Brent crude ain't doing great. $72 a barrel, basically, because the global economy is slowing down. So it goes back to Trump and gold. We believe, and again, we don't know, but we believe that he's going to do what he always does. By their deeds you shall know them. And he's always pushed the Fed to lower interest rates. So if the Fed lowers interest rates, the dollar, which had gotten stronger, goes down. The deeper the dollar falls, the higher gold prices go. End of story. So again, right now it's a guessing game. What's going to go on?
Gold and silver have consistently proven their worth as time-tested assets that thrive in periods of economic uncertainty and geopolitical instability. Gerald Celente's insights, combined with historical patterns and current market trends, underscore the unparalleled significance of these precious metals in safeguarding wealth and navigating turbulent times. As we delve deeper into the dynamics surrounding gold and silver, their relevance in a rapidly evolving global economic landscape becomes increasingly apparent. Silver, often regarded as gold's less glamorous counterpart, holds tremendous potential due to its unique dual utility as both a monetary and industrial asset. The surge in industrial demand for silver, driven by the global shift toward renewable energy, particularly solar power, is reshaping its market dynamics. Photovoltaic cells, essential components of solar panels, rely heavily on silver. With countries like China and India leading the renewable energy revolution, silver's role in powering this transformation ensures robust demand for the foreseeable future. Beyond solar panels, silver is indispensable in various high-tech applications, including electronics, medical devices, and electric vehicles. These industrial uses position silver as a critical material in a technology-driven world. While gold often captures the spotlight as a store of value, silver's versatility and growing industrial demand make it an attractive investment, especially for those seeking exposure to both monetary and industrial market forces. Meanwhile, gold remains the cornerstone of financial security, especially during times of economic upheaval. Central banks worldwide have been on a buying spree, accumulating gold at record levels. This trend reflects a growing lack of confidence in fiat currencies and a strategic pivot toward tangible assets. The de-dollarization movement, spearheaded by nations within the BRICS bloc, highlights gold's pivotal role in a world increasingly seeking alternatives to the US dollar-dominated monetary system. The concept of a gold-backed BRICS currency has gained significant traction, with proposals to peg a portion of the currency to gold reserves. Such a move would not only enhance the stability and credibility of the proposed currency, but also substantially increase global demand for gold. As central banks continue to stockpile gold, this strategic accumulation underscores the metal's enduring value and its role as a hedge against systemic risks. Inflation, a persistent concern in global markets, remains a key driver for both gold and silver prices. While official inflation figures often downplay the actual impact on households, the erosion of purchasing power is undeniable. Gold and silver offer a reliable hedge against inflation, preserving wealth when fiat currencies falter. Celente's observations about the current economic landscape, characterized by soaring debt, rising interest rates, and geopolitical tensions, reinforce the urgency of holding tangible assets in one's portfolio. Geopolitical factors further amplify the appeal of precious metals. While Trump's election victory has introduced optimism for some, his policies, ranging from potential trade wars to his historical push for lower interest rates, could create new uncertainties in global markets. Celente suggests that Trump's emphasis on low interest rates and a weaker dollar may inadvertently fuel inflation, creating a favorable environment for gold and silver. Additionally, ongoing conflicts in the Middle East and unresolved tensions in Ukraine add layers of unpredictability that bolster the case for safe haven assets. Central banks' unwavering appetite for gold signals its critical role in the evolving financial ecosystem. Massive gold purchases by these institutions underscore their long-term strategy to diversify reserves and hedge against currency volatility. For individual investors, This trend serves as a compelling reminder of gold's intrinsic value and its unmatched ability to preserve wealth during periods of uncertainty. Silver's potential for explosive growth often surpasses that of gold during bull markets. Historically, silver has exhibited more dramatic price movements than gold, making it an attractive option for investors seeking higher returns. With industrial demand on the rise and monetary uncertainty persisting, silver is well-positioned for a significant rally in the coming years. Price predictions for gold and silver in 2025 reflect a bullish outlook. Analysts forecast gold prices to surpass $3,000 per ounce, with some estimates reaching as high as $4,000 in a highly inflationary scenario. Silver, with its dual role as an industrial and monetary metal, could climb to $50 per ounce or higher. In an environment where industrial demand converges with economic instability, silver could even test its historical highs near $100 per ounce. These optimistic projections are grounded in tangible trends rather than speculative hopes. Central bank accumulation of gold, declining trust in fiat currencies, and the increasing appeal of alternatives to the US dollar are creating a perfect storm for precious metals. Silver's unique position in both industrial and monetary spheres further enhances its potential for substantial gains. Historical data supports the resilience and growth of gold and silver during challenging times. During the 1970s, a period marked by high inflation and economic instability, gold saw a 30-fold increase in price. More recently, between 2000 and 2010, gold experienced a 7-fold gain, rising from $253 per ounce to $1,700. Silver, too, has demonstrated its capacity for explosive growth, often outpacing gold during periods of heightened demand. The investment case for gold and silver extends beyond their potential for price appreciation. These metals serve as a hedge against systemic risk, offering a safe haven in a world fraught with economic and geopolitical uncertainties. Gerald Celente's analysis underscores the need for investors to rethink traditional strategies and recognize the unparalleled value of precious metals in preserving wealth. As we approach 2025, the case for gold and silver grows stronger. The convergence of economic, geopolitical, and environmental factors creates a unique environment where these assets are not just desirable, but essential. Whether you're seeking to protect your wealth or capitalize on market opportunities, gold and silver offer a pathway to financial security in an unpredictable world. Gerald Celente's insights highlight the broader implications of these trends. The challenges facing the global economy are multifaceted, but the solutions often lie in the lessons of history. Gold and silver have consistently proven their worth as the ultimate hedges against chaos, and their relevance in today's financial landscape is more pronounced than ever. Adding to this, the potential revaluation of gold and silver cannot be ignored. With central banks discussing the possibility of revaluing gold to offset national debts and liabilities, the metals could see unprecedented price hikes. Such a revaluation would have far-reaching implications, potentially reshaping global financial markets and reaffirming gold and silver's roles as cornerstone assets. Moreover, technological advancements in blockchain and digital currencies may integrate with precious metals, further enhancing their appeal. A digital currency backed by gold or silver could provide the transparency and stability that fiat currencies lack, creating a new paradigm in global finance. For individual investors, the key takeaway is clear. Gold and silver are not just commodities. They are essential components of a resilient investment portfolio. As the global economic landscape continues to evolve, these metals offer a sense of security and a hedge against the unknown. Whether through direct ownership of bullion or investment in mining stocks, now is the time to consider increasing exposure to these timeless assets. The journey to 2025 will undoubtedly be marked by economic shifts, geopolitical tensions, and technological advancements. Through it all, gold and silver stand out as beacons of stability and opportunity. Their unique ability to preserve wealth, hedge against inflation, and offer upside potential makes them indispensable in a world of uncertainty. Gerald Celente's observations serve as a timely reminder of their enduring value and their critical role in shaping the future of global finance.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.